the impulsive moves. All right, cool. So for those of you, can I get a show of hands of people who haven't seen me present this of how to chart levels? Who hasn't seen it? I know a lot of you guys have seen it, but who hasn't? You haven't? Okay. Because if enough people haven't seen it, then it's all worth it. I have notes from the last time you did it. Cool. All right. Nice. I haven't. Dang, that's a lot. Okay. Sometimes I feel like I'm repeating myself, but then I forget that different people come in at different times. Sometimes there's like 50 people in here from that are different people, and then there's another group with like a 30 other people that come. So, okay, cool. So for the OGs that already know, I'll basically ask you guys, what the next step or certain things, so we can get some activity going. And then for those of you who is your first time, enjoy, because this will help clear your mind of how to chart. You'll know how to chart levels after this. You'll feel a lot more confident. Obviously, you need to practice. Just because I told you this doesn't mean tomorrow you can just chart everything perfectly. There's practice with it, trial and error. But you at least know how I chart things and how I kind of find levels and how to make trades off of them. All right, so the first thing you do is you go to the daily time frame on any chart, right? We're on the daily time frame. I like to take everything off, all indicators. I might have volume up, but even then, I'll take volume off right now. I don't really care about the volume. So you want a completely stripped naked chart just like this with daily, and you want to go and look at where price is at currently, right? So when you do look at the price currently, you want to go to like a reasonable amount up and down, and you can tell based off previous price movements how this stock moves, right? Does it move like, does it move? How big are the candles? Over the past month, how many dollars does it move? And that's kind of how you want for in range. This is for you trading anything. When you eventually start trading like a stock that, I'm not gonna say your favorite stock, because I never like to say like, oh, I have a favorite stock or whatever. But the stock that I'm playing now, SPY is my favorite. I'll say that. But companies wise, I don't really like when people have like companies where they like it too much, because then what happens is you get a little too stuck in it and you start loving the stock, and you start never fall in love with the stock, because one day it will betray you, right? So just get ready for that. But so for here, let's say it's at 220. So what we're gonna do is, for this example, I'm gonna chart the whole levels, but reasonably you would want to go from like 250 down to maybe 200 or something around this range, right? So this is a nice range. You pull it back. You can even pull it back to the year if you want, like a year ago, just to kind of get a better idea, right? So from 2021 all the way over, cool. These are the levels to kind of look for. Tesla is a mover, Google too. So I see where CRM had heavy consolidation at the area of its most recent gap. Yeah. So what about hating a stock? So you become too bearish on it. Yeah, I hate stocks all the time. You guys saw me talk about that. A long rant on Baba. Yeah, Baba, Neo. What are the other ones that I hate? Wish, all the meme stocks. I don't really care for them. GameStop's garbage. Look, I'll play it when it pops, but I'm not playing it any other day. But that's my opinion. Other people can trade whatever they want, For me, yeah, Boeing. I hate Boeing. Boeing's garbage. Peloton. There's a lot of garbage stocks. But if the opportunity is there, cool. When I was saying I hate the stock, I was saying I'm not investing in it. And I really just don't even want to trade it because it just sucks. So here we go. I do not love Baba, bro. But so what we do is, okay, so you have a range. You want impulsive moves. What is an impulsive move? This is how an impulsive move looks. It goes to a certain area and shoots down. Goes to a certain area, shoots up. Goes down, shoots up. Something like that, right? You want those areas. Now, in between, it'll do one of these little ones, and then it'll go down. You want to be able to focus on this and this. Sometimes there's ones in between that you'll see, but it just follow your eyes, right? And use path. So if you guys use TradingView, path is perfect for training your eye on where to set levels, because you'll forget where everything was, and you'll just do every point. So if you see here, look, if you look here, there's one here. Let's just start from this one, right? So these are little ones, but then they start getting a little bigger. So you got there. Here's a little bit of price consolidation, but we don't have a pivot down. You always want up and down. Just because there's a point up here, if it just drops a little bit and consolidates, it doesn't really count, right? So you got that right there. This would have been if there's a couple more candles to the right, but there isn't. So we're going to come all the way down here. Here, just because it's a the high in this range. You just go here, back down to here, right? You're gonna come up. Let's see if yeah, we'll go with this range to here, here, and you start seeing, okay, cool, coming down. So it's a little tighter, right? So keep in mind, the ones that are really key levels are these big ones right here. The ones that have a huge reaction have more importance than these little ones, but you'll follow, right? So then we come all the way up to here, down, up, down. I'm gonna do it kind of quickly because now you guys understand, you know, what's going on. You guys following so far? Does this make sense? You could go here to here, up here, down here, up here, down here, up here, down here, 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 and then now we're here. So the last one isn't really going to be a level unless, but look what happens. Just watch what happens as I start setting these levels. Just watch. You're going to start seeing price start to behave a certain way around these levels, and we'll adjust. Look, oh no, we're not doing that. That's going to be too bright. So we'll do this, and then we'll kind of make it a little bit darker. So we're going to just, now we're going to set those levels, and we will adjust them, right? It's just to kind of train your eye. So we're going to do that, down to here, up to here, like right here. Are you guys noticing something while I'm doing it? I haven't even gotten over here. Are you guys noticing something? Yeah, what do you notice? It's within the range you set. No, yeah, something else. Look, I set this level here, and look what happened over here. It's being used as both support and resistance all the way into the future. Levels are supporting the future, exactly. Because price has memory. Right? You got to remember that trading, who's trading other than the algorithms? Humans. And what do humans do? We have memories, we have areas where things happen, so we're like, oh, we want to take advantage and do it again. There's things that happen, oh, every time it tapped this area and it fell really hard, so the next time it taps it, what do you think is going to happen? It falls, but oh, then it got caught because it was you know, they're tapping it, you know, the more you know. Yeah. So look, and now we're going to just keep going with all the points. You'll clean them up later, right? So we have this level here, this one up here, this one down here. It's going to start looking like a barcode, but remember, we're going to clean it up. Don't worry. We have one right here. Okay, and then we have this, which pretty much is that as well, which is also that resistance here. What is that? What is that, Anderson? Is Anderson in here? Go back one peak. What? This one? Or where was I? This one? Oh, you said peak. Before your start? Oh gosh. It's so hard when someone's like, yeah, go over here, go over there. I'm like, what do I do? What peak do you mean? Oh, this one here? Are you saying I forgot one? Everybody's typing. Before the first white line. Yeah, by the earnings. Oh, this peak here. Yeah, right here, right? I missed this one. What? November. 2021 November. Bro, what? Is what he was talking about. Oh, like he was calling out. Man, I'm blocking this guy. Yo, Anderson, you're out of here. Give me. Does anybody know him? Anybody save him before I give him the ban hammer? Nope. 5, 4, 3, 2, 1. Looks like there's advertisement going on. Boom! He's out of here. Where'd he go? He disappeared. Oh, no, wait, he's still there. Never mind. Hold up. Oh, whoa. And Boom, baby. All right, he's out of here. I'll take the strong report. Okay. Oh, like that peak here is what you mean? Like to chart that? This one here? Oh, yeah, I know. I just had to start somewhere, you know what I mean? I was just like, whatever, I'll just start. But yeah, you know, you can keep doing it, right? You can go back into the past and kind of see where it was at. Yeah. But yeah, just for the example, you know, I'm not charting the whole, like, everything. I just want to kind of get the basics of it. So then now if you wanted to chart CRM, you could easily complete the whole. That's a big top. That's true. That is true. Here. Yeah, it's just for the example's sake. I wasn't doing it to like actually trade it. So we'll just set a level here. Hold up. So we could have these set here. Let's go here. Here kind of looks like that. This one up here. Hold up. But yeah, I know. But you know what the cool thing is? Look, you know here what happens is, look, if I didn't chart this, you know where I would have charted it? Here. And if I didn't chart here, you know where I would have charted it? Here. So price will probably have memory. Like, let's say it was a critical area here. Oh, I get what you mean. Okay, so what you're saying is, yeah, okay. Sorry, I'm kind of out of the loop. Like, I'll be in the middle of saying something, and then I'll just see a comment, and I don't know if someone's, like, adding to the commentary or asking a question. All right, yeah, thanks for that. Exactly. Critical areas here, as you guys can see, price's memory, look, ended up being an area here that gave price trouble. So we're going to go forward with it. And then, let's see, so we have this level here, 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 which is there and there. Okay, cool. There and there, right there. Go with here, and like here. And then now we have this, which has already been done. This one's already been done. This one has not, and this one has not. Cool. Oh yeah, it looks all crazy. Everybody sends me DMs all the time, and they're like, "Hey, my chart looks insane." Yeah, it looks insane because you're looking at the whole picture, right? You're not trading this like this. If you're trading, when you are trading, it looks like this, and it actually makes sense. Look, just because we charted those levels, now look, now you could take calls down here up to the middle. You could take puts up here at a rejection down to the middle. You could take puts up here and take it to this level, and then when it gets rejected like that, you could take puts down to this level. I'm going to take out the thing, right? So that's the first step, and I have it here. Current price, dramatic swings, high and lows, right? Now what we do is you go to the 4 hour, and what we're going to look for is multiple rejections, like both ways, right? Price can reject falling down, which is like a bounce, and it can reject like from the top, and price clusters. So what that means is like areas where price kind of sits on and uses it as like a bed to move forward. Where is CRM? I'm gonna move everything up here. All right, so what we do now is, cool, we have the levels. We're gonna go to the 4 hour. We're gonna get rid of this. Now we don't need it anymore. So these are pretty good levels so far. Now we kind of have an idea of CRM, you know, these are areas to kind of watch for. And you can tell historically, look, these levels get tested as resistance, come back down, come back again, resistance, comes back down, comes back again, finally breaks out. What triangle pattern is that? Where price gets rejected here, comes but keeps making higher lows. An ascending triangle, right? You can easily see that it looks kind of like this, and price is doing this, and it's getting ready to break out because it keeps making higher lows. So if you guys don't know how to chart triangles, I have a video. If you go to my Amin alerts, I did it I think it was the last live stream. We went, or the one before that, we went over what triangles that I use. I use triangles a lot for my trading. So it's an ascending triangle because the support is there's a resistance line, an ascending wedge is usually, I mean, it is kind of an ascending wedge a little bit if you look at it here, but you can kind of see that price from here to here. These are the really extreme points, right? The really dramatic rejection back to here. Those are your first 2 points. I don't think DBV is even here. They ask questions and then they disappear, but oh well. Yeah, ascending wedge is bearish, right? So, and I'll go over it real quick. An ascending wedge, the difference between it, and you'll notice it, is that an ascending wedge makes higher highs and higher lows into a resistance. What's happening is the range is really high, and then all of a sudden the candles start getting smaller and it's losing. You remember when I said price exhaustion? Price gets tired as it keeps going higher and higher. Well, it's about to collapse. And then bears see that price is getting weak, so that's when they have the best time to short it and dump shares. And then that will cause the break. Now, an ascending triangle is bullish typically because there's a straight resistance. This time what's happening is when you do this, it is getting tighter, but we keep trying. Here, I need to save this and refresh it because it's getting slow again. So the difference here is that, so for this one, price does this, or no, usually I do something like this. I'll go like that, something like that, and then it'll hit a resistance, and then usually it'll pop, and then it'll drop like that, right? An ascending triangle, on the other hand, is bullish because it keeps testing that same spot. Boom, hits it, falls down really hard, but then it tries again, but it doesn't fall down as hard. So the bulls are stacking up under and keep pushing the same spot until finally it breaks. Because the bears keep trying to push shares, but the bears are getting weaker at this point. Does that make sense? You see the difference? And let me know if I need to like explain it more, because I'll try to explain it like a different way. But that's the difference. This is like a wall that's being hit over and over and over until it finally breaks a hole into it. This one, on the other hand, is like someone running up a hill and they're getting exhausted by the time they get up there. So, yeah. So that's kind of the difference between, because they kind of look the same. But remember, and I tell you guys exactly in the video the difference between all of the triangles, because it's all about the trend lines that you make. See how here is making a higher high and higher low? So it's on an uptrend, but the price is tightening. That's how you can see a wedge. Here, on the other hand, there is no higher high happening. And if you look here, where was it? Here, and remember that triangles they're not perfect, right? They're not gonna make that perfect thing that I did. But you can tell that got rejected, it came down, it tried again, and then look, it tries again, but it keeps making the higher. So the last time that it did it, boom, you can almost see the triangle with your eyes. You can see that this is the area that they keep dumping and that this is kind of going like this into it, and then it breaks up above. So yeah, that's a little triangle class in between. Oh, here he comes. Juicy's here with the funny commentary. So back to it. Let me get to here. So price rings. Okay, so now we're going to go to the 4 hour. We're going to look for multiple rejections, price clusters, and a line that can be both support and resistance. That's called role reversal. Very, very, very important here. Areas that can go from support to resistance, almost staple that there's a floor there. In order to go from the first floor to the second floor, you need a ceiling and a floor, right? Once you go through the ceiling and you go to the second floor and you land there, you need something to hold you. That's the confirmation, or else you're going to break through the ceiling and fall through the same hole and come right back down. So whenever price does this, where it breaks through, look, it breaks through a hard resistance, uses it as support here, you've now solidified that this floor is a key floor, right? This is a key area here. And the stronger it falls into it and the harder it bounces off of it, the more key that level is. Is there a triangle at the current level? You could say, like, this is CRM, right, Val? That you're looking at? Go to a smaller time frame and you'll get a little bit more detail. So some of these happen in bigger time frames. Look, this triangle was forming from July 6th and it broke out August 19th. You can kind of see that bigger time frame ones give bigger moves, but there probably was patterns within it that like made it go even higher. So that's a key level. And then look, you see how it tried really hard. It's basically at that 250, right? Really close to a psychological number if you just pull it down a little bit, right? So if you kind of go like this, and remember, support and resistance is that this number is just to remind you that it's a range. It's not an exact number. It doesn't mean that this is the exact number. It's actually more like this. These are areas to kind of watch for. And then it makes more sense. You're like, oh, okay, now it hits here and here and here. Okay, I get it. Right? These lines just kind of help you remember that, oh, okay, there's a resistance around this area. I need to be careful in case there's a pattern of reversal. So look, it broke through, it shot up, right? You see this very impulsive move down into a very impulsive move up? Remember that, because look what happens when it falls off a cliff. Where's the first place it catches? Right here. That's why it's a very, very important level. And then it bounces right back off into this level, comes back down, look, kind of consolidates. But when it breaks, look, it falls. When it really breaks, not like one of these little breaks, when it really breaks with a candle, it breaks down completely. So we're on the 4 hour, right? You see how these are kind of big, kind of spread apart? There's something going on in history in between here that'll help you within a trade. Because if you take a trade at 225, 232 is kind of far. There might be some resistances in between. So that's when you go to the 4 hour, and now you can get a little bit more detail. You can kind of spread it out, right? And you can look, we're going to look in between this box here, right? So this is the levels that we want to look at, in between this and this for now. You don't want too many. You want just maybe 2. Just think about like splitting up like I don't know, cutting up like brownies or something. I don't know, something random. But like you don't want to have too many small ones. You just have like decent size, not brownies, that's too tiny. I don't know. My analogies are ass today. But look, so you see here how price is clustering at this resistance, and then it had trouble over here. Pizza? Yeah, I guess pizza too, yeah. Or like, I don't know, like, I want something like two, 3 slices, like nothing crazy. You know what I mean? I don't know, a sandwich. Yeah, we'll go with the sandwich, right? You got the burger. You just need a little bit, you know, meat and a tomato or something. I don't know. Anyways, look here. You see that resistance? You see how price over here has trouble? You see how here there's a long wick and it comes right here? You see how, look, it'll break through. These aren't critical levels. Look here, look. Used it as support here and here, then broke through under, and then now look, came up. Tried to use this key level to bounce up, kind of using it. So this is an area to watch for. So now you're going to set your level, usually a thinner, you know, and you're going to kind of keep it like here, and we'll kind of make it thinner. We'll make it like a soft green or something, right? And if you could find another one at this upper half, great. If it's not there, don't force it. So now you look here, look. You see the wick stopped here, but the bodies. This is where you start looking at the bodies of the candles as well as the wicks, right? Before, on the bigger time frames, I like the wicks. On the 4 hour, I like body clusters. I want to see where the candles closed. I want to see where they got stopped, right? So here, you see how all these candles right here, this one, this is a green candle, gets rejected here, but the red is red here. Here we see some resistance. Here we see some support. All the way over here, we see some support here. Okay, cool. We got a nice little level here. Does that mean that when price comes here, it's going to fall off a cliff? No. It just means that if you do see, these are areas that you can take profit, right? If you get in here, you go, okay, this is my first profit target. This is my second. And then if it's really running, this is how I keep my runner, and I'll close it here. You guys understand? This is how you trade with a plan. It's like a fib. Yeah, exactly. Levels, to me, levels are better than fibs because they react a lot more. But yeah, it's ideally the same thing. Thumbs up. You guys understand? You guys need me to go over it again? For those that like, especially for those, because I know the thumbs up for the people who already know. I want to really focus on the people who don't. The people who are like, oh, I missed it. Are you guys following? And I'm telling you, I will thank you if you can challenge me, or like, don't just challenge me to challenge me, but like if you really have a genuine question, definitely ask, because somebody else will get helped as well. For sure, levels are better than fib. Yeah, I mean that's my opinion. There's fib traders that will probably be like, no, or they'll be like, why don't you use both? It's like, I mean, you can, but levels are number one to me. And I keep my thumbs up. All right, cool. So that's how you kind of do it. So now when you look at, where was it? Oh, okay. So now, you know what's interesting is, let's now look at these levels, right? Because this is where the price is. That's why I made it very important. I don't like fib levels are better in my opinion. Yeah. Yep. What's your cleanup for the line criteria? Yeah, so the cleanup, what I like to do is go to like the 15-minute after and really just try to look at like, you know, try to look for an average area. Like I said, these lines are just ranges, so you'll never actually place a line perfectly on everything. Some of them will miss it like this, right? Sometimes they'll go a little bit through it because it's messy, because people are buying constantly. If millions of people are buying and selling at the same time, you think we can make a perfect straight line? That's not how it works. There's overreactions. There's people, you know, who probably push this down like this? You know, retail trying to FOMO. You know what I mean? Retail is probably making these lines all messed up. It's our fault. But okay, so here now we're gonna break it into the 15-minute, right? And we're gonna look. Oh, so one of the other things. Whoops, let me not get ahead of myself. So now we did that. Yesterday's high and low price. I say yesterday for sure. Look at the day before. Was it still in that range? Okay, make a little line there. You're gonna have a lot of lines, and you're gonna be like, wait, this is confusing. But if you know and you color code every line, it'll start to make sense. You'll just understand. And once the line is like not respected, you just delete it. It's gone. It's off your screen. But if it respects it, you would want every single line that the price can possibly make you money on, right? It's just how it is. If it can make you money and it can make you consistent, I'm keeping that line. I don't care if my thing looks like a barcode, but it's not going to look like a barcode because that's not how price works, right? Price kind of moves, you know, a couple dollars at a time at least. So we're going to look at yesterday's high and low. So this time what I do is I like to go to the daily, and I just go to like the wicks, right? So this one I'll use the horizontal ray. I don't like to use the horizontal lines because I'll confuse myself. That way you can actually aim it at the exact place that you want it to, so you'll know which day it was that, okay, this is the high for this day. Like you can easily go back and just look. So here we have that recent low. We have here, okay, we'll close this one because that's actually the current day. I want to see if the example is shown. Then we have this one. We don't need to do this one. You see how I'm saying that's not necessary because price is not near it, but the low is near it. So definitely pay attention. We're looking at this candle here. You want to make sure that price needs to pay attention to that low. Great. So now I'm going to save it and refresh it because TradingView is annoying. And now we're going to go to the 15-minute and we're going to see how price reacted to all of these levels and see if you could have possibly made a trade off these. So that was the low, right, of the day before. What did price do this day? Look, it bounced off of it here, got rejected here, used it as support here. Look, used it as support here. You see how levels are like magic? Can you do the high and low again, please? Yeah, I got you. So I went to the daily, and all I did was I just placed a horizontal ray on the wicks, just like how you would on an inside bar, right? And this is just to keep an eye, like, hey, you know, keep an eye on these levels from yesterday. Usually what I'll do personally is I'm not going to set a line, because when I'm actually trading, I have stuff kind of scanned out like this, and I can tell that this is the high. Like I don't need to put the line, right? If price starts coming up here, then I set the line. But for practice, I say, because you guys might forget or something, I'm like, just set the line and just keep it there. Another thing that you need to know. Look, the levels are crazy. They're time consuming, but if you want to be consistent and accurate with your trading, you guys see me every Friday. Whenever I explain this stuff, I'm like, hey, SPY probably will do this and then bounce off and do this and then do that. And usually I'm pretty accurate, probably like 80%, 85%. And that's in a choppy market. Imagine if I was in a trending market. Trending market Friday lottos are nuts, like nuts. But I'm still performing at a high level with chop, which shows that I know what I'm talking about. Like I know that levels work. I believe in them. Look at the pre-market too, right? So if you look at the pre-market, which is here, you have the after hours in the pre-market. CRM is kind of nasty for the pre-market. I like to SPY better, but it's something to keep note of. Is like, okay, maybe, you know, we'll set a little pre-market here, pre-market low, and pre-market high. So we have, but if the high is within the price, you don't need to because it already crossed it, right? So if price already, so this is the pre-market high here. And look what price did when it came up here. Look, there's no level. You would have never seen it. Look, you would have never seen that rejection if you didn't look at the pre-market high. There was no way you would have known because it's in between key levels. Look, but in the middle of the day, you could actually look and see, whoa, I could have made a nice trade off that rejection candle on that long wick. You know how I like long wicks rejection? That could have been an easy put. Right all the way down into where? This level. Or even into yesterday's low. Come on, bro. Thumbs up if it's magic. If levels are magic. It's magic, bro. You think you need 18,000 MACD indicators and RSI indicators? Nope. You don't need any of that stuff. Clear up your screen. Levels, candles, trend lines. And then I like to sprinkle moving averages on top of that. And volume. The only indicators I use is moving averages and volume. That's it. No need for that MACD, just a barcode. Exactly. Is there a specific time frame during the pre-market that you use? Not really. You'll be able to see pretty much the pre-market high. Sometimes it's glitchy, so don't take it like completely. But look, it's still gonna print this on the 10-minute. It's gonna print it on the 15-minute. It's gonna print it on the 30-minute. It's gonna print it on the, I think, on the 1 minute. It's just gonna look really ugly. What was that? Hold up. Was that already there? Oh, look. That wasn't even the pre-market high. I'm tripping. This was a pre-market high. Even better. Nice rejection. But it's the same idea, though. You know that right in this range is where price got rejected. So, you know, yeah, you can flip through them and kind of see